New markets news. China's stock markets roared back from a week-long break, hitting two-year peaks inside the first few minutes of trade. But they did lose steam after officials failed to inspire confidence in stimulus plans intended to turn around a sputtering economy. Economic Planner Chairman Zheng Shanji told reporters that China was fully confident of achieving economic targets for 2024 and would pull forward 200 billion yuan from next year's budget to spend on investment projects and support local governments. But his failure to detail specific new stimulus measures rekindled market doubts about Beijing's commitment to ensuring the world's second largest economy can climb out of its most serious slump since the global pandemic and reach 5% growth. The Hang Seng slid to 7.9%, while the Shanghai Composite closed at 4.6% higher, and Japan's Nikkei shed 1% at the close of trade. U.S. stocks slid on Monday after Treasury yields hit their highest level since summer and oil prices continue to climb. The S&P 500 dropped 1%, though it's still close to its all-time high set a week earlier. The Dow Jones Industrial fell by 0.9%, coming off its own record, while the Nasdaq Composite also sank by 1.2%. The JSE is weaker today. All share index has fallen 1.6% at 84,954. The industrial 25 index is off 2.3%. Financials are also down 0.5%, and the top 10 resources index is 2% lower. The precious metals and mining index has also declined by 1.1%. The rand is currently trading at 17 rand 45 to the dollar, 22 rand 84 to the pound, and 19 rand 17 cents to the euro. Gold is trading at $2,638 and platinum at $964 per ounce. The price of Brent crude is at $79.28 a barrel. Makwe Masilela from Makwe Masilela Fund Managers is our analyst for today. Makwe, thank you so much for joining us on Point. The issue of perhaps, I know that this came in a little earlier before we started the markets, that we saw that JP Morgan has increased its stake in retail group Shoprite to more than 7%, with its interest in the Brackenfell-based company now valued at 12.5 billion rand, making it one of the largest largest shareholders in the group. Tell us about why this is significant. And it looks like Shoprite is making moves when you compare it to some of its peers in the retail sector.
Definitely, and we cannot blame them to think that, number one, generally when it comes to food gets to be seen as a more defensive, and more importantly, we know that more than 50% of our people spend more than 60% of their income on food. So now if you see the likes of JP Morgan increasing their stake, then that's saying among all these food retailers, they think the likes of Shoprite will do better than the others. And yes, one can easily agree with them, because those are the guys who've got a decent exposure when it comes to the middle to lower LSM as compared to their peers. So I think that signifies that at least the guys are doing something right when it comes to Shoprite, and also boost confidence when it comes to the local markets.
Yes, speaking and sticking to local markets, this week we have the mining and manufacturing data. What are you at Makwe Masilela Fund Managers forecasting with regards to the kind of numbers that we're expecting from this two data?
You know, we've seen the July, the mining numbers when it comes to July, they fell, I think, by almost 1.4%. And now we think that it will continue to slow down up until this whole stimulus gets to kick in when it comes to the Chinese stimulus going forward. As yet, I don't think August will be seeing any results from the stimulus that has been announced, that is the monetary stimulus coming out of China. And we saw our July manufacturing going up by 1.7%, among other things, benefiting from the fact that we don't have load shedding. We think that it will still continue to show some growth, but we don't expect the growth to continue to shoot out the lights, but we expect a decent growth from that end as well.
Yeah. When we head to the east, to China, when the markets closed on Friday, the issue that, the stimulus was announced and we saw a 25% upshoot in in the markets there, but now to turn around a few days later and you see that the market is starting to be doubtful. What do you read of that, the fact that there was not enough information coming out of the government about how exactly the stimulus package would be advanced?
You know, it's not only just about the lack of information. I mean, the guys announced 200 billion. You know, market's expectation were around 3 trillion. So you see a huge difference. But anyway, regardless of that, we know that for all these things to work, you need both monetary and fiscal stimulus to work together so that you can help your economy. And you are right, markets have been excited when it comes to the monetary stimulus, but the much awaited fiscal stimulus, unfortunately, it disappointed market participants. And we all know, as we said, that you need both of them to be working together so that they can lift the economy. But hey, the guys continue to be confident that regardless, they will still be able to achieve the economic target of 5%. So I think it's a question of wait and see. And most market participants were hopeful, given that this is the last quarter, and so far the economic growth has not been that great, that the guys will do at least more so that they make sure that they achieve that economic growth.
Yeah, I've been keeping a close eye on the price of Brent crude oil. You know, we saw yesterday it peaked to around $80 per barrel, and it has since moderated by around 1%. Do we have reason to worry about the movement of the oil price, considering that, you know, the impact that it will have on South Africans should it continue climbing up?
Definitely, we are a net importer when it comes to oil, and unfortunately, if the rand doesn't help us, then it means that itself, high oil prices are inflationary in their nature. And as we've seen already, we had one cut when it comes to our interest rates because our inflation has been doing okay, going down. So if oil prices get out of control, then unfortunately that might impact our consumer inflation, and unfortunately our Reserve Bank won't have enough room to be able to cut interest rates, as we know that if interest rates don't go down, then there's a chances that our economy can easily fall into a recession because consumers and businesses will be struggling.
Makwe, thank you. Always great speaking to you. I've been speaking to Makwe Masilela. He is with Makwe Masilela Fund Managers, and he was our market analyst for today.